In a stunning move, 11 of the biggest banks in the U.S. have stepped in to save First Republic Bank, depositing $30 billion to prop up the beleaguered midsized lender. The rescue comes after confidence in smaller lenders cratered following the collapse of Silicon Valley Bank and Signature Bank, in what has been an extraordinary week. Bank of America, Citigroup, J.P. Morgan Chase, and Wells Fargo will deposit $5 billion each. Goldman Sachs and Morgan Stanley will deposit $2.5 billion each. An additional $5 billion will come from 5 other banks. The lenders said in a statement that the action was intended to showcase their commitment to lenders like First Republic Bank. In a separate statement, Secretary of the Treasury Janet Yellen, Federal Reserve Board Chair Jerome Powell, FDIC Chairman Martin Brunberg and Acting Controller of the Currency Michael Hsu praised the bank's decision. This show of support by a group of large banks is most welcome, and demonstrates the resilience of the banking system, they said. California-based First Republic has experienced an exodus of depositors since the failures of those 2 banks, as many of its customers moved their money to larger rivals. Like SVB, First Republic was founded in California, and it caters to wealthy individuals and businesses. Timothy Coffey, a managing director at the brokerage Janney, said First Republic was known as being relatively conservative. From a credit perspective, it's a very safe institution, he said. They don't do a lot of risky loans. On Wednesday, Fitch Ratings and S&P Global Ratings both downgraded First Republic's credit rating. Explaining its decision, Fitch said the bank's focus on wealthy and financially sophisticated customers in select urban coastal markets in the U.S. has led to a high proportion of uninsured deposits. In the days since regulators shut down Silicon Valley Bank and Signature Bank, anxiety about the health and safety of the banking system has grown. Shares of U.S. small, regional banks have been hit hard, as investors worried other lenders could also collapse, even though there has been no indication there are system-wide problems. Treasury Secretary Yellen sought to reassure markets during testimony before the Senate Finance Committee on Thursday. "I can reassure the members of this committee that our banking system remains sound, and that Americans can feel confident that their deposits will be there when they need them," she said. As the banking industry navigates this crisis of confidence, the actions of these 11 lenders to prop up First Republic Bank serve as a beacon of hope that the system can weather the storm.